Earlier this summer, we had the opportunity to sit down with Leigh Curyer of NexGen Energy. For many years, we've been intrigued by the uranium industry due to the looming supply and demand imbalance. Our diligence in this space brought us to invest behind Leigh and his team at NexGen due to the incredible asset quality of its Arrow deposit, along with Leigh's unique 3P mantra of people, process, then project. We explore all of these topics and more in the following excerpts of our conversation with Leigh Curyer.
And to the point about creating shareholder value and thinking objectively and outside the box, I mean, a lot of times when you think about capital raising, there's a bit of a chicken and the egg with, do you have the deposit? Do you have and you guys just very fortunately had that very early on. And so you have the flexibility to think about, okay, where do we want the capital to come from? So there's no shortage, of executives in the industry that are willing to just dilute shareholders, skim off the top. And so would love maybe for you to, and not touch debt financing. So would love for you to explain and think about how you wrangled in a Leigh Ka-shing or how you structured the Queens Road and how you're thinking about those to optimize the capital structure for investors.
Yeah, another excellent question. And when we've raised capital along the way, we've always had the perspective of the optimal package at the time that we need the money. And with respect to Leigh Ka-shing, and that was presented to us by Warren Gilman, who was Leigh Ka-shing's resource investment lead for CEF at the time. He saw our headline intercepts and came out to site and did all his due diligence. But this was prior to us having a maiden resource statement. And Warren offered us financing at that time. But and this might surprise a lot of people, for an exploration company in 2015, we actually said, well, no, not yet. We're not in the window to raise money at the moment. And we want to get that main resource statement out first, because that's what the money had been invested in us to do, and wanted to see that. And as enticing as having Warren Gilman and Leigh Ka-shing on the registry prior to the maiden resource statement was, we were very disciplined and was going to abide by our commitment to the previous financing. We get the resource statement, and Warren completely respected that. And I think that's why Warren got such a good feeling about us, about, we are very, very focused on shareholder returns and optimizing the situation. And we got the main resource out. I then phoned up Warren, and Travis and I negotiated with Warren very efficiently and got that first tranche. Now, at the time, that was there was some elements of the market that were critical of us doing that type of financing package, but it was a very unique financing package, considering we were getting the voting shares rights over the holding, which was very, very important to us. And so it was a bit of a hybrid, very unique type of financing package for that stage of a company's development, but it was fit for purpose. Never has a company been in our situation of having such a fabulous asset. And so what we do is just, okay, might not have been done before, but it was fit for purpose for our particular circumstances, incorporating technical and commercial and all those other aspects. And I think that's what we do very, very well. We then spent the next 12 months working with Warren and doing as much DD on CEF, Leigh Ka-shing, and their intentions than they were doing on us, because we wanted complete alignment with a significant shareholder with respect to our plans. And that's where I conveyed, well, we're going to put a lot of money into the community programs now, even before we get into construction and cash flow. And again, that was different as well. A lot of other companies have just waited until they're in production before those community programs happen. But we said, well, no, we're doing that now. We think that the time to do it is now. And again, to CEF, Warren and Leigh Ka-shing's credit, they said, we love that. And that's what we did. Again, not conventional, hadn't been done before, but that's our approach. It's the way to do it, the proper way to do it, being respectful of all stakeholders on every given day. And again, we got some criticism. Well, you're taking out 120 million as well on top of already the 50 million US. There's a lot of debt. We even had industry peers say, "Oh, they're under a ton of debt," but we knew we weren't under a ton of debt, and consequently, 18 months prior to the term of that facility coming up, we've converted it completely into equity, and those financings were all done at a 30% premium to the prevailing 10-day VWAP. And if we'd done the alternative of a market raise at that time, we probably would have been doing it at a 25% discount to the 10-day VWAP with a half warrant attached. So we did a completely, from a dilution perspective, the most optimal package we could with, at the time, with a significant shareholder who was completely aligned with our company's philosophies and objectives. And what they were impressed with was that we were broadening the scope and defining a scope far greater than what they had originally imagined themselves. And so what did that mean? Well, a far tighter capital structure than what we otherwise would have had.
Just briefly jumping in, because I think you raised some phenomenal points there, Leigh. And as somebody that I think was invested pre-resource with you and has been along for the ride, you guys have done so many things differently, and you have taken some criticism along the way. I think your ability to velvet rope this asset to the investment community and say, if you want to invest with us, you'll invest on our timelines when we, kind of permit you to, versus being at the mercy of the market is very unique for across the junior resource space. If others listening don't look at peer companies, this is a very different process that you've run. How much of that is due to your confidence in the asset? And what I mean by that is, how early on in the development of this asset did you have enough confidence as a management team to say it can withstand debt at a time when most resource companies don't? It can withstand community engagement and spending when most management teams would never even think to do that because they're miles away from permitting being completed. How much of this process has been driven by the asset, and how much has been driven by your management style?
The confidence rests firmly, or most materially, with the confidence in the management team. And when I say the management team, it's also the board and every member of the team in the organization, and also significant shareholders. But the asset, given its quality, has allowed us to define a scope that's far greater than what I think we've seen in the past by other companies. We don't put, like, in terms of other companies that I have been associated with in the past, there's always been sometimes a real focus on a certain share price by a certain date. Now, to me, that's backward. You get the process right, and it starts with the people. The process results in the projects. That's the three P's. For example, we start with the people. Have they got the right characteristics for the environment that we're in? Those people, it's not about any one individual. It's about the greater good and all the stakeholders. And with getting that process right and having the confidence to do that, it results in a really good project. And that process started when even identifying the properties in the first place. Started with the people, rigorous process to identify the properties. Now, the asset itself, I think, has just allowed us to execute on a scale which is even surprised me. When I first started out, I thought we would be successful, but the quality of what we've got, I see it as a responsibility. We've got to do it incredibly well. It's not like some marginal asset of which there's over 100 on the planet. We have actually been gifted an incredible asset, and so it's incumbent on us to do it our very, very best. And we put a lot of pressure on ourselves. There's no doubt. If we're looking to be the best in every aspect of this organisation and the opportunity that we've got, it comes with added pressures. But we love that. We really do. And so we focus on getting that people right, the process right. Well, the share price will be as good as it can be. And I think other people who perhaps put it, okay, I want this to be at X dollars by a certain time, they could actually limit the upside by having that perspective. Whereas we kind of like not get real focus on the price. We get focused on the process, knowing with absolute confidence that that share price will be as good as it can be on any given day, and doesn't cap the upside. And that's the simple process that we have.
And I want to touch on the people aspect and maybe the talent acquisition that you've gathered, and with a quality of asset that you have, there's probably a fantastic number of people that want to join NexGen, but at the same point in time, it has to be a right fit. So for someone like Anthony George coming over from London, or Brad Wall, I mean, maybe walk us through this sort of courting process, or what sort of you identified as the right fit for those people to join with you.
Sure. Well, I'll start with Brad. He was former premier, and I waited basically 12 months before approaching Brad. But what I'd learned about Brad and his focus on working for the province as the premier and his commitment to it, I thought, well, hey, what better candidate to help us elevate the platform of what we're capable of doing than the former premier? And I approached him, and yeah, it was bold. My father said, like, who do you think you are, frankly, at the time, and going to approach the former premier? And I thought, well, why not? I think he might be interested. And I spent a couple of hours with Brad. He was very kind enough to give me his time, and here's a gentleman who was courted by a lot of mining companies. And Brad will tell you himself, he just identified with our approach and our values, and that is about acting in the best interest of all stakeholders on every single day. And he saw what we'd been doing in the community, and the feedback he had always received about what we're doing in the community was very strong. He said, you know, we haven't, whilst in government, we'd never heard that before, and in fact, we even questioned whether it was right or not. And then the more he got involved, and the more his ministers had told him, he was a very big fan of the project and the way we were going about it. And so that's what enticed him. It wasn't my good looks and charm; it was what we're doing as an organisation. And then with respect to Tony George, like, we spent near on 18 months looking for Tony George. Came very close to a couple of people with in that process, but Tony's key aspect was he'd worked in I think the ideal size of a company, large projects in developing companies, not large projects in major mining companies. And so Tony brought within that ideal balance, which I feel we need given our stage of development, where he's got very perhaps large company disciplines, but the nimbleness to act on a project without some of the constraints that you get with those large companies. And so again, Tony's been a magnificent fit for our stage of development, and also our culture, where there's a commitment to, okay, we get how people have done it in the past, and and there's some great examples and some not so great examples, but here's our project, here's our opportunity, and we actually think the standard on this particular aspect can go here. And Tony's totally up for that. Yeah, I'll tell you one thing that doesn't work at our organisation is when someone comes into it and says, well, that's how we did it at so-and-so. That doesn't wash with us. Well, they didn't have Barrow either. They didn't have this opportunity in front of them either. So we are very, I just say we have got a very high level of confidence around our process, because it is so objective and contestable. And I say it often, bring me the ideas. It's not all the ideas come from me. I just run the process, ensuring that all components are taken into account and it reflects the values of the organisation before we make the decision. And then we have an incredible focus on the accountability for that. Our organisation, everyone in it, has very high levels of responsibility and very high levels of accountability. And you've probably seen that as well. We were very transparent even before the maiden resource about our process, which has a very high ratio of exploration and development spend relative to G&A. Now, that was even before the discovery. During the discovery, after discovery today, we really focus on that ratio, because you can't guarantee exploration success, but you can guarantee the process. And to give the exploration success the best opportunity of success, you need a high ratio of every dollar possible going into the ground. And so we were very open with that, and we presented to BlackRock, and they said, well, hey, this is the blueprint for exploration. These disciplines, etc., and the transparency of it is excellent. And they invested even before we had a resource, which was testing, their mandate. They don't really normally do that at the time. So again, the process, or the people and the process, got a very good shareholder on board before they normally would. Same with CEF, and we're very transparent with that. And then for a resource that's discovered over 100 million pounds, no resource has been defined so cheaply on a per pound basis or a per meter basis. And again, we incorporated directional drilling, which hadn't been done before in the basin. Well, why wouldn't we give it a shot? There was no real downside to me. And if it worked, it was going to be phenomenal. So let's give it a go. And we did, and it worked incredibly phenomenally. So that's what we're always testing. Well, okay, how else can we do it? And I think just my definition of confidence is having the ability to ask yourself immediately after a success, well, what did we learn, and are there areas to do it better? We don't celebrate our successes for very long at all. We're proud of them, but we're immediately on what did we learn, and how can we do it better? And that's ingrained throughout everyone in this organization.
You said you were really you really identified with the people who were looking at what's possible. What's the inversion? Who are the people that you didn't agree with?
Mainly the ones who are so definitive with respect to why something couldn't be there. And it just didn't make sense to me. And I just think exploration, you've got to test theories and be prepared to be wrong. And we were prepared to be wrong, but we had a very diligent process where if we were wrong, it wasn't through just one person's opinion alone. We had a very rigorous process looking at all of the information objectively to generate those 12 targets to then set about exploring. So when it comes to your question about what makes us different, I think our level of objectivity and our decision-making process, which incorporates, as I just said, objectivity, contestability, independence, is the key to exploration. And that process has proven to be very, very successful. Now, the luck for us has been the quality in terms of what we've actually discovered. We can't control that, but we have been blessed with finding a deposit that is in an incredibly technically competent setting, very clean metallurgy, and has size and grade like that's never been seen before. So that was the luck, but it wasn't luck in terms of what led us there and the process that we deployed. That was purely on us. And even like today, we constantly say internally, we are measuring ourselves on what we do to optimize what we've been given, not waiting for the asset to deliver it for us. We've put additional pressure on ourselves always as to what is the optimal outcome here given what we've been presented. And that is the DNA of the team at NexGen, as opposed to maybe some other companies that, find a deposit, wait for the market to get hot, and then leverage off that. And those companies do make a return, but we are about making the most optimal return possible on any given day. And we measure ourselves very, very critically on what we do as a management team to optimize what we've been presented. And I think that's probably a real differentiator with this group compared to others, and we don't need another company in front of us to feel good about ourselves or comfortable. We are about being out in front, setting new standards in every aspect. And that's just not financially, technically. It's also about our commitment to communities, to governments. I say it often. I want the tax department to say those guys at NexGen are the best company to deal with. We recognise the tax office has a role to play. They've got jobs to do as well. We're not going to fight it or complain about it. We're going to respect them as a stakeholder as well, and conduct ourselves accordingly. And it might sound a little boring, but it's what this whole company is about. Is about being incredibly respectful to all stakeholders. No one stakeholder is more important than another. We treat them all very, very respectfully. We've just got different roles to play.
Because of the competitiveness and scale of this asset, it's obviously a phenomenal story if you go into production independently. The cash flows alone, I mean, you show it well in your deck, but it's a really unique opportunity. That being said, given that there are globally producing assets farther up the cost structure that are still viewed as top tier in today's market, the asset's clearly worth a lot more to other parties, meaning that if somebody were to purchase Arrow and potentially say, we're not producing in 25 or 26, we're producing in 2035, the other assets that are currently producing that would maybe struggle to compete as the market adjusted to Arrow's presence are suddenly worth a lot more. They can guide the timeline of this cycle much more effectively. How do you think about that, about the asset being worth more in the hands of current producers than it is potentially independently? And how do you think about what you view the fair value is versus what they should view the fair value as?
Yeah, it's a good question. I think we've got as an organization, we've got a very clear understanding of the value of this asset now and in the hands of others. The way that I've thought of it is like this. This asset is going to disrupt the top 5 uranium companies in the space. Their businesses are going to change forever if we take this into production as NexGen, and that is our focus. We approach every day on the basis we'll be the ones closing the mine. Whether that materializes in them coming aggressively or not will remain to be seen. And I in order to get the right actions on a daily basis, we are very just call it maybe blinkered. No, we're not blinkered. We're not. But we are very committed to approaching every day and doing the right things on the basis that we'll be the ones closing the mine down many decades from now. And so whatever transpires, will remain to be seen. We can only control what we're controlling at the moment and in the future, and that's the process I keep going on. So it's a difficult one to answer, Arthur, except we acknowledge and understand that this is going to disrupt the top 5 uranium producers that currently exist worldwide. I'll just make one other point as well, and that it's not just uranium producers, but the move towards clean electrification and ESG has resulted. There's very strong interest from major mining companies that currently are not uranium producers. Given our location, our very small footprint, the fact that the mine will take off the equivalent of 70 million vehicles a year off the road, and then also the cash flow component, there's which will take us into the top 15 of all mining companies worldwide, even to the very majors who may not currently be in uranium. That's a significant opportunity. And with this move towards clean electrification, we are the go-to investment for that. So to answer your question, I think I might just add, or take the opportunity to add, it's not just the current uranium producers that this is going to affect. It's going to affect a wider audience of mining-focused companies.
Is the impact of the sort of the mobile uranium market, the Sprott's announcement and all of the sort of transitory actors. And I thought about this because of Arthur's question, thinking of who would needs to probably take you out. The more you go out and try to start contracting your supply, the more it becomes a panic situation, probably on Cameco's behalf. But I almost wonder if you can there's another party now getting involved, right? So it's getting really noisy if you're Duke or Exelon, in terms of the amount of people you can. I mean, no one can handle the long term probably as well as you, but I'm sort of wondering about how that influences the next couple years as contracting discussions start happening.
Well, UPC have been around for over, I think it's about 15 years now, and they've got a very good knowledge of the market and the demand and supply situation and the availability of supply. And so I think seeing what they're doing, they see the opportunity ahead of us, and it's immediate. It's happening now, the very early stages of which. So I think it's one of the most encouraging signs with respect to the market for increased uranium prices that I've seen since NexGen was incorporated. I think that's very, very clear. Also, you've seen other uranium companies buy pounds on market. They know it as well because they're at the coalface of this actual market, and they know just how tight it is to actually get their hands on available supplies. So I think it's an incredible indicator. No investor should come back to all of us in 6 months from now and say, "Why didn't you tell me?" We're telling you, it's happening. It's in the early stages, and I've seen it before. I've experienced this process back in 04 to 08, and I tell you, this one coming is going to be even more significant than what we saw back then. In terms of the second part of your question, and this might surprise some, we are not in a hurry to go out and secure offtake agreements, and that probably reflects confidence in our resource and our project and our execution of it. I actually not interested in making utilities feel comfortable with respect to supply. I'm not, and so with respect to us, we're going to leave it until it's at the optimal time to write these offtake arrangements. And we want to see some price discovery occur, which reflects good contracting pricing given the current state of mined production, what the true all-in cost of that is, before we actually go and start contracting or off-taking ourselves. We know we're going to your point, Stephen, we're going to be highly influential in the pricing of uranium worldwide when we go, or even before we go into production, however we approach it. And we're looking to optimize that. And we'll optimize that in a number of ways. And that can be production ramped up or production ramped down. What we see, the world needs more than one arrow in the middle part of this decade. It needs multiple arrows. So it's going to be an incredibly exciting time. And this movement, or this what was announced as a new trading hub in the last couple of days, is going to be created in Asia between Kazakhstan and China. I think, again, it's another example of the Chinese anxiety around available supplies in the future. And that's purely predicated or motivated by trying to get security of supply to reflect the consumption that they're going to be doing in the future. So I think I've never, and I've been in the industry since 2002 consistently, I've never seen the moons align or the stars aligning as we've seen them today, and it's in the very early stages.